Alright, so PayPal reported quarterly earnings and to be honest was a bit better than what most people expected. Not great, but better than what most people expected. The market was, I think, also a bit happy as well because as you remember, last quarter was not good at all. Reduction in guidance for this year and then the huge goal for the next couple of years as well with the amount of active users that they will have. Huge reduction there. That's why we've seen the stock go down over 50% year to date already. So some might ask, is now a good time to buy PayPal? Is it still a growth stock or is it more on the value side of things? So we're going to have a look at the earnings in this quarter. And I'm going to talk about why PayPal actually at this price might actually be worth picking up, especially if you're looking for a company that is going to provide value for investors because it is a profitable one. Free cash flow of over $1 billion each and every quarter. So it is also rebuying some shares, which in turn adds value to your shares. So first up, we're going to have a look at the cards on stockcard.io. It's also in the channel's portfolio. It's free to follow, link down in the description below. So PayPal, high growth potential. Yes, it still has high growth potential, even though it is already maybe a bit more mature business than the likes of SoFi and Square. Strong operations, pessimistic investors, obviously, it has underperformed the market. If you look at even the 1 year chart, for example, it's down 67% in 1 year. Now, yes, granted, it was overvalued before. It was, well, trading at a very, very high PE for a company that was not really growing as fast as its peers. Now it's a fairly priced stock, pretty neutral. Also remember that there is some headwinds with regards to eBay. eBay used to use PayPal only. They've now, well, parted ways, let's say, and that headwind will last until the next quarter. So by next quarter, we might maybe get some better news on the whole ecosystem, but they already gave us some numbers during this quarter, excluding eBay. So we're obviously going to have a look at that as well. Now, just a small reminder before we continue at all those details. This is what PayPal offers today. On the right, you see the huge list of maybe companies they own, systems they own, products that they offer. If you look at how they started, completely there on the left, PayPal Balance, and remember who was one of the main founders of PayPal, the man, the myth, the legend himself, Elon Musk. Now, since then, it has grown quite nicely, right? I mean, if you do offer and own everything that's on the right here, well, you're offering users a lot of value. Now, going back here on StockCard, we have the analyst consensus, 24 buy ratings, 12 hold, only 1 sell, which makes this extremely appealing. But on the other hand, analysts like to switch from buy to hold to sell extremely fast, and it's very, very price driven. So if the price sentiment is going up, they'll obviously upgrade. If it goes down, they will downgrade. As for the analyst target, the average that is $129.21. So it offers quite a nice upside from today's price of $87.93. Now, if you look at the growth potential segment, it's green because, well, in most sectors that PayPal is in, given by StockCard, so financial services, mobile payments, blockchain-based application, peer-to-peer payment system, digital currencies, etc. Besides the credit services, this is neutral. It's green, which means that it's growing in that market faster than the average, which is great to see. Even at size that PayPal is, it's still growing quite nicely. Now, it also has strong operations. This is maybe something you want to look for, especially in the current market, but more specifically the current economic environment. So sales growth, still good. Profitability is now neutral because, well, earnings per share growth trend is a bit neutral. It remains stable, but you will see it's actually down year over year. But again, huge effects there from eBay and some from other factors as well. But that will, I believe, improve over time. And then cash availability is green. They have cash, free cash flow positive. They have lots of cash on balance. And we're going to talk about the free cash flow in just a bit, because as you can see right here, the price of PayPal has gone down tremendously. It's trading at 21 times PE for the next 12 months. And free cash flow in the last 12 months is close to $5 billion. Now, the last time it was trading at such a low level, let's say, they were generating revenues of just over $9 billion or so and generating just over $1 billion in free cash flow per year. And like I said, in this current market environment, in this current economic environment, you really want to look for these type of companies, compounding companies that will repay and give shareholders more value as they continue to grow. Because as they buy more shares, your shares become more valuable. And who knows, maybe in the future, when it will be extremely mature business, they'll pay dividends. But as of now, you just be happy that they're rebuying their shares. And we're going to have a look at how many shares they actually bought, because they are buying shares at a pretty nice pace. But first, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couch investor to get your free 10 stock picks now. Alright, so a couple of highlights. We're going to go more in depth in just a bit. So total payment volume grew 15%, net revenue grew 8%, but excluding eBay, that would have been around 15%. Non-GAAP earnings per share, like I said, has been decreasing and it's actually down 28%. Then operating cash flow is down 29%, free cash flow down 32%, but still over $1 billion. Now, a couple of things with regards to the earnings per share. So they say here that GAAP and non-GAAP earnings per share include a negative impact of around 3 cents resulting from the suspension of transactional services in Russia. They also said that GAAP and non-GAAP earnings per share include approximately 6 cents benefit from credit loss reserve releases in Q1 2021. And GAAP earnings per share includes a net gain of around 2 cents on PayPal's strategic investment portfolio compared to a net loss of around 9 cents in the same quarter last year. Now, it's also very important to note that last year Q1 was their best ever quarter, so quite a difficult comparison. Now, in this quarter, they added 2.4 million net new actives, bring the total active accounts to 429 million, up 9%, 5.2 billion payments transactions, up 18%, and 47 payment transactions per active accounts on a trailing 12-month basis. Now, with regards to the net new actives, so it's lower than what most were expecting, especially the company, because they previously guided to around 15 to 20 new net new actives by the end of the year. Now, if you do the basic math, 2.4 times 4 is barely 10 million. And that's also because, well, the new guidance is 10 million net new actives for this year. Now, you might remember what they said last quarter, and that's the fact that they are now going after much higher valued customers, valued active users, meaning users that have a higher chance of, well, transacting more on the platform, because it makes no sense for the company to go after a lot of users that only, let's say, transact once a month or so. So that's one of the reasons why guidance is a bit lower, and hopefully we might see, well, transactions go up and revenue go up as well. Now, as for balance sheet and liquidity, as I said before, they have some cash on balance. So cash equivalents and investment total $15.1 billion at the end of the quarter. Debt totaled $9.2 billion. In Q1, they generated cash flow from operations of $1.2 billion, declining 29%, and free cash flow of $1.1 billion, declining 32%. Now, in that quarter, they repurchased shares worth around $1.5 billion. And this is a notable accelerated pace versus previous quarters. Actually, they already spent around 44% of what they spent last year. And to be honest, that number might actually increase as they see that, well, their company is cheap, their shares are cheap, they're still generating over $1 billion in free cash flow, expected to be $5 billion by the end of the year, for the full year that is. So why not buy your own shares if you think they are so cheap? And as for Q2 guidance, they expect it to grow around 9% to around $6.8 billion. Analysts were expecting around $7 billion, so a little miss on that front. And then the non-GAAP earnings per share of around 86 cents, also quite a miss there. Analysts were looking for $1.11. And as for the full year guidance, well, they already reduced it last time, so nothing really changed that much. And now last couple of things before we end this video, and that's about Venmo. So last quarter, Venmo had around 83 million users. Now it has around 85 million users. It's also set to launch Pay with Venmo on Amazon later this year. And management also reiterated its over 50% revenue growth guidance for Venmo. So that's all good and nice. Overall, to conclude this video that maybe has been a bit too long, but hey, what the heck. So to me, another okay quarter, much better than the last one. I think management realized that they were a bit over optimistic before, and they admitted it actually during the call. They admitted during the notes that, well, it was their fault that they miscommunicated how the company was maybe going to perform this year in a turbulent market, etc., that they needed to portray the message a bit better. And I think they've done just that, and that's also quite nice to hear. Overall, I do think it's a value buy with a little bit of growth there, but it's a value buy because, well, the company isn't growing as fast as its peers, Square, SoFi, Affirm, you name it, but it offers a lot of value to its shareholders, and that's why we're going to add it to the channel's portfolio on stockcart.io. Now, I do want to know your thoughts on PayPal, so leave it all down in the comments below. Have you been buying? Have you been selling? What were your plans with PayPal? Leave it all down in the comments below. And that will be it for this video. If you enjoyed it, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button and maybe consider watching one of those two videos right here. And I see you all in the next video. Bye bye.